please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Madhav Dhar, Managing Partner at GTI Capital Group, now joins in to discuss the fundamentals of the market. Madhav, hi, thank you very much for joining in. Well, the last time we spoke was even before the budget had taken place for this fiscal. So there's been a lot of water under the bridge when it comes to the markets and a significant correction that we've seen as well. So wanted to first get your broad thoughts. Where are we placed, and is this year going to be much more difficult as compared to last?
Well, let me take the easiest question first. I mean, it's very easy to have a much more difficult than last year. So that's an easy one. It's hard to repeat 31% years. But more seriously, I think what strikes me the most is how much talk and angst and worry there has been around a correction that is barely 7 or 8% after a huge year last year and a big year the year before that. So it just tells you, how much new money has come into the market, how complacent that money is, how perhaps unseasoned that money is. And that worries me, that it's just so skittish. I mean, yesterday the headline in the Economic Times was Sensex plunges 1.04%. And I mean, nothing plunges 1%, it just goes down 1%. So what used to be normal has become worrisome, and that worries me. I mean, simply put, a return of 20% and a VIX, a volatility of 10% is not real life. Real life is returns of 10% and volatility of 20%. So we've had an inverted life in the markets for 2 or 3 years, and I think it's reverting a little bit both back to normal, and that is to be expected, first. Second, I think we're also adjusting to a liquidity-driven market, giving way to tighter liquidity, but being compensated perhaps by higher earnings and higher growth. And that transition between a liquidity-driven run and an earnings-driven market will be rocky, and I think we're seeing that transition and adjustment phase. And of course, certain factors like, the scam in the public sector banks is not very helpful. So that's my sense of things.
Fair enough. So, the typical question, is this a fall in a ongoing bull market, Madhav? I mean, last couple of appearances on the show, you've called it a very old bull, but still going strong, right?
Yeah. No, I feel the same way. I think this will be a correction and an ongoing bull market. My concern is simply that the correction is not either big enough or deep enough or long enough for it to really shake people up. And corrections end when people are sort of really shaken up. It changes their convictions. And I don't quite see that. And maybe there's fine-tuning, and as you know, I'm not one for trying to predict very short-term moves, but it just doesn't seem enough to me. I mean, there's so much hand-wringing and angst. Worldwide, by the way, I was in the U.S. For about 10 days, till a few days ago, and it's very similar, that people are just, very worried about what is a very short correction. So that's worrisome. And it's hard to see a real bear market unless you can smell a recession 6 months or 9 months out. And taking the lead country, which is the United States, it's very hard to see a recession. So if you don't have that, I don't think you'll have a bear market. But you could have a much more meaningful correction that is perhaps, 12 to 20%, of which we are barely halfway through. So my own gut instinct is it gets worse.
Okay. Madhav, I wanted to ask you about your opinion in terms of what Trump might do when it comes to all of this tariff talk, and whether it's just talk. But before that, I wanted to ask you about the PSU banks. You alluded to it in your first answer. How much of a risk do you think it actually is, what's happening with this whole Nirav Modi case?
No, listen, I mean, at the risk of telescoping much more broadly, I think this is a big risk. And I think more philosophically, I think it is really time that India started thinking like a true modern functioning economy and stopped thinking about, you know, this model and our model and India is unique and we have this, you know, combination of gentle socialism and all that stuff. I think this should be a real, very sharp message that you cannot have half of a large country like India's credit being run by fiat, by politicians, by non-economic forces that are subversive to the average common man, and they exist because they are being of service to the average common man. I think this is time to stare that in the face and truly fundamentally reform these institutions. And I'm not one to say that, you know, privatization is the panacea for everything and it fixes everything, but it is a terribly important forward step in improving a system. And I think this is just a symptom of that. And the problem with our reforms is always, and I can understand why, is that it is band-aids, you know. Let's recapitalize them. Let's have this minor adjustment. Let give the management a little more freedom, but not quite enough. So this, I think this will hopefully be a shock to the system. I mean, just like the telecom mess was a shock to the system 20 years ago, and it reformed and created a whole private revolution that has been fantastic for the common man. It's time we do that for credit. So yes, I think this is a big deal. I don't think this is one-off. I think this is systemic, and I think it adds to the risk premium of doing business in India, and it's very bad.
Madhav, we have to take a very quick commercial break, so request you to stay with us. I mean, the market's picked up, actually, by the way. We're up about 40 points now on the Nifty. We barely had about 18 points when we started at 11. So there is little improvement coming through. We're in conversation with Madhav Dhar. Madhav, just to sort of coming back to here and now, some believe that even as earnings continue to perform and match expectations, you know, PE multiples will sort of keep contracting, and that will keep stock prices, even with improving earnings where they are, or maybe even drifting lower. Do you think that is possible and not, it may continue, I mean, say for example, through 2018?
No, it's certainly possible. I mean, it would be unusual, but it's possible. I think perhaps a more likely scenario is that you have a slightly deeper correction that takes PEs down, and when the earnings then start rising over the course of the year, the market trends up, but perhaps from lower levels. It's very hard for markets to basically flatline. That tends not to happen. So and the end result may be the same, which is that you go down 5-6% more, or maybe even 10% more, and then you go up 10 or 12% from there. I mean, I'd put my odds on that. Then the market sort of literally goes sideways. So as I said, I just don't think there's enough fear in the market quite yet. When it does get priced in, then you need to take the opposite side of that and bet that earnings growth and economic growth in the end is what stocks really want, and the market will then rise. And the history of market cycles are... sorry, go ahead.
No, go ahead. Complete your answer.
No, I was saying that history is not very neat and clean, but market cycles, you tend to typically have 3 cycles, which is a PE expansion out of the gloom based on nothing, which is the very early stage of a bull market, which happened already, I would say, around the world post the economic recession. Then you have an earnings-driven phase, which I think you're seeing in the US over the last year or two, and you will see that in India now. And the last phase is usually a manic phase, which is both earnings and the PE expand into a blow-off, which is a classic example was 2000 in NASDAQ, 2007 around world market, which is higher PEs on higher E. And that probably is 2 years away. So I think we're in that in-between phase, which is transitioning to earnings growth amid rising interest rates and higher friction, and amid higher PE. So there will be this tug of war, and eventually earnings will win.
Okay, you mentioned tug of war, so I'm going to ask you what I wanted to earlier. What is the probability of a real trade war breaking out? Do you think that it's probably getting diluted in terms of talk already?
Yes, I think so. I mean, I don't think there's any danger of a full-blown trade war, and I think it's very hard to categorize Trump and the U.S. administration because it's so unusual and so different and so unpredictable. But it's certainly more talk than action, whether it's Paris Accord or tariffs or building a wall in Mexico. But it's not baseless. So I think, you know, the talk of steel tariffs is real. I mean, there may be some adjustments here and there. This tough talk about American companies, highlighted primarily with Apple, bringing $500 billion back is real. I mean, it bullied American companies to bring their capital back. I mean, how bad is it? That depends on your ideological choices. But there is non-market related policy action by the administration, which is largely at the margin, slightly negative for markets. But is it a big deal? I mean, is there energy to disrupt global trade? I don't think so. I don't think that'll happen.
You know, you liked SBI, you liked DLF at one point, maybe what, 6 months back, a year back. So just sticking to PSU banks and State Bank of India with what has happened at PNB, stocks have completely gotten crushed. What's your view on that space, the PSU bank space?
Yeah. No, I think, you know, State Bank is the only one I would deal with for exactly what happened, frankly. And again, as you do know, Prashant, I mean, I tend to buy very early in cycles and before the game is recognized. So SBI is a 2-year-old trade for me, and as is DLF. And those were early stage turnarounds, and I don't have quite the same positions I had. But I still think it's okay, you know. And but yeah, definitely this creates a cloud over even the biggest and the most transparent and covered and frankly well-run banks at the margin, like the State Bank of India. So yeah, I mean, I think it just gives you pause. It gives you pause, as I said, that there is genuine risk premium in different parts of India that have to do with transparency and government and governance and corruption. And this is a very big example of that. So yeah, you do rethink these things.
Okay. All right. On that note, Madhav, we're going to wrap up the conversation. Always a pleasure. Thank you very much for joining in and speaking with us.